Hello, welcome back. This is a review video since September, end of September, to today, so May 30th. I think 27th of September to May 30th. And this is kind of a since Inception type performance review. I do it each quarter. So last quarter I had one, and now this quarter. Just kind of see like through the whole way, right through every single day, how I've done. This also includes the days where there's a week, 1 week, 2 week buffer between quarters. So those trades are included. You also have, sometimes where I don't think, yeah, so just those weeks. Yeah, so everything is every single day that's included. I mean, all the trades, everything. So it's just kind of like if you just would have left it and done nothing, where we'd be at, type. So yeah, investing in the future. So okay, this is kind of a total performance. So you can see really this the first quarter was quite steady. You had over here, so you have actually 22nd of September it says here, all the way to the first quarter was mid-December around here. So you can see we kind of followed SPY. We were outperforming SPY, very close to Nasdaq. Then the second quarter became more volatile for sure. Over here you can see we started getting volatility, kind of fell down a bit and then came back up over here, so very good. And then we ended around 12% that quarter, and then you can see kind of this quarter we were started at the bottom around this area, and then we came all the way back up, so we gained 50% this quarter, and we were around neutral here when I started the quarter. So overall we're around 55.4%, net return since inception over here, so this is very good. Yeah, so you can see kind of here it's more compressed. Next time I'll use the SVJ image format so it doesn't look pixelated. So anyways, over here you can see kind of we started very neutral kind of. This is when I want to have this type of portfolio return this upcoming quarter, because I'm gonna be going places and stuff, so I don't want to be too worried about it. Also, want to be outperforming, but I want to have it a bit more correlated to SPY. So that's what I'm probably gonna do, and also I'm already at 55.4% return, so I don't really have to worry too much about underperforming overall. Over here we have Nasdaq. So we were outperforming. We had a huge gap over here because I was right short all the tariff stuff. So we had a huge gap, and then you had the Trump tweet. So midday market manipulation type thing made us really fall. You can see this jump doesn't look that big, but for us it's big because over here this was a 10% jump or 13% on Nasdaq in a single day. So that really caused my ETFs that I was holding to fall around 50%, and imagine that was 40% of our portfolio, so that's a 20% drop from our peak. So you can see that caused a huge drop. I mean, you're still outperforming, but it's an insane drop. And then over here, right, this had my Bitcoin play, which it wasn't working, or actually not Bitcoin, but mostly a MicroStrategy play. So kind of that short did not start to work, and I had to switch paths. Kind of like, okay, this is too much damage, and then we got all the way up. So I mean, really this kind of play was the worst part, I'd say. I mean, over here we had a bunch of trades, all very good. Here we had a bit of volatility. This is kind of when I switched sectors, which I'm not going to switch into the nat gas sector anymore. It's not really worth it. The return on it's not worth it to the risk. So over here we kind of caught up, and then we were doing pretty good, and then the tweet kind of messed up. So let's hope not something dumb again doesn't happen like that. But I mean, this kind of occurrence, happened. Last time it happened was around 2000 something. I forgot. So this type of 20% fall could happen is possibly around every 20 years from Nasdaq or SPY. So that's fine. Over here we have a total. So we have performed 53% of days, which is quite high. Above 50 is my goal. And then Nasdaq has returned a total of 5%, a grand 5%. We've outperforming it by 50%. So yeah, as you can see, HR Capital is winning. We're winning by a lot. So S&P 500. S&P 500 has not increased as much as Nasdaq. It hasn't fallen as much too over here, but it has had a net return of 2.7%, a great 2.7%. I mean, after all this drama with the tariffs and stuff, this is still quite high. I mean, we haven't had any good deals. They've all been bad deals. There has been no deal. So basically, I mean, this rally is basically garbage. So I mean, you can argue that this is a good shorting opportunity. Now I was shorting some super micro. Now you don't want to let your shorts go on for too long at this point, because who knows what's going to happen. But I mean, we're basically right back over here, so I mean, we could see a good summer rally up top. That'd be good. I mean, this upcoming quarter, I'm mostly going to be following SPY because I'm so high up, so I don't really have to worry too much. But we'll see. I mean, I did ride this part. When you realize, okay, it's just going to go up from here, right? Because there's times when even bad news makes it go up. That's when you should start buying. So just start buying, and then we go up a bunch. Great. And also, I'd like to note that, I mean, this quarter I've done only the 40% on ETFs. Over here, this I did go into 100%, so this caused a kind of a, I mean, compare it to like around here, right? But at this time, this was a big drop, so that's why it looked quite big. And then over here, I think I was about 100% on sometimes. Now I'm doing always like a 40% policy thing, so it's always on 40%. This huge increase has been only on 40%. You know, if it was 100%, it'd be insanely high up, but it was only 40%. Over here, this was only 40% drop, so I mean, that's why we don't really want to be leveraged 100%, because if you are, this 120% drop could have been 50%, and to regain a 50% drop, you have to make 100%. So that's why, you know, 100% thing is quite risky. I mean, already being 40% in a 3x or 1.2 on top of like a regular SPY, so that's why you gotta be careful. But yeah, so this has only been on 40% this quarter. This quarter was also only on 40%, even probably a bit less. And the second quarter was the only one where I changed it up a little. But yeah. So we are above 50% on SPY, so that's good. 51.2. HR Capital, it's in a 2.7, so we're 53% outperforming, close to that. Dow Jones has been the worst one so far. It's returned a grand total of less than 1%. We have done, you know, so basically 55% outperforming. I mean, and then we've also outperformed 52, so that's good. Over here, comparison to all. It's been a quite interesting market dynamic shift. You can see here everything was quite almost the exact same, which is interesting. Then we kind of saw Dow kind of falling off a little. And then Dow kind of remained its ground up until this rally, which didn't get as much of the gains. Over here, I mean, NASDAQ has mostly always been on top except for the big drop. And then you also got SPY, which has always kind of been in the middle of everything. So, yeah. Over here, you have every single gain. So our goal is 0.17% each day. We are right now at 0.32, so that's very high. This is right. You can see right here the Trump trade, so that was not good. And then over here, you can have everything's in this -2 to like you can say 8 range, which is quite high. Most of it is in there. You have quite some outliers, maybe right here. These two, look out. And you also have some high outliers over here. Not much to worry about. Overall, so we have more green days than red days. We also have some neutral. However, on the green days, we have 72% profitable trades. So what I was going to say was that on the green days, we do earn more than on the red, so that's fine. And neutral is 0. Our profitable trades are at 72%. That's good. I think the increase from last performance review, so that's great. So yeah, this is what meant. Our gains are around, you can see 2.3, 1.9, so it's around 0.4% higher. So that's quite good. You can see, I mean, our standard deviation is 3.5, however, so this has increased quite a bit due to this quarter. So that means our Sharpe ratio has decreased a little, but I mean, we're still doing quite good. Over here, you have SPY. So SPY's gains are actually less than its losses, are less than the losses. However, it does gain a lot more than lose, so it's still positive. Now it's not up by too much, right? It's up 2.7. So, and the standard deviation is 1.4, which is quite high, to be honest. Over here, so our ratios, right? How much we're gaining to how much we're losing. So kind of just measuring, okay, are you winning? Are you respectively losing or winning more than you're losing in comparison to SPY or the S&P? So you want this number to be the difference. You want it to be greater than, you want it to be positive, right? And right now it is positive, so that's great. Our losses could be a lot less, around 1% less, and then our gains could be also less too. So I mean, we're doing quite good. I wouldn't want to get to these levels. That means like also my return would decrease, but you know, right now it's pretty good. Positive difference, and our standard deviation is quite a bit higher. However, we do have a positive difference, so it's kind of accounted for. Mean transactions, so this is like a buy or a sell, or 2 buys, 2 sells. So that's what I count as a transaction. 1.6, you could say. And then over here, the day trade. So this is just like if I open a trade and I close it in the same day, that's 1. 0.5, so it's not too high. A lot of the trades I also wanted to close them before the close, just to not leave them overnight. And I'd probably reopen the same trade later at the open. So sometimes I do that, and that would count as 1. But a lot of times I'd also just hold trades over time. So the average hedge trade is 0.67%. So this basically means like when I decide to make a position, my average gain is around 0.67. You know, this is kind of like when I decide to like hedge something. So this would be in the 40% category, not in the 60% SPY holding. So like if I decide to do it like a 3x play on the 40%, or I decide to do a short or whatever, my average gain is around 0.67, which is pretty good. I mean, it is positive, so that's great. Over here, so I did a pie chart instead of like the bar chart. Over here, we have kind of what I've invested in since I started. Majority, you could see majority over here, negative 3x semiconductors and SPY. So that's basically more than the majority. Over here, we do have some longs, so barely any longs. Some short Nasdaq, and SSPLG is SPY. So this was my HIMS trade, really. This last quarter I did that. SMST, I also did that this quarter on negative MicroStrategy. Some crypto, very small crypto amounts. And then you also have the VIX. I did some VIX. NVIDIA shorts, I did do quite a bit of NVIDIA shorts. I never went long NVIDIA, so I guess you could say that. I guess you could say I did go long NVIDIA because Soxel holds it. But, directly on the NVIDIA play, I haven't really gone long on that. And then I did some nat gas, which I won't go back to, it's not worth it. And then you also have PSQ, so negative 1x Nasdaq, TZA, this is IWM. Yeah, so pretty good. And there's some things really I want to highlight. This is some Apple, Amazon type thing, and some stuff over here. So yeah, pretty good. So here you can see everything I've done, which ones I've gained the most, which ones I've gained the least. Really also what matters here is the quantity, which isn't shown. So for example, SPLG has a big quantity over here, has around 23.8%, and the gains are above 50, so more than 50% of the time I'm winning on a trade for SPLG. SOXA is also quite high. SOXIS, see where SOXIS is, SOXA, let's see, right here, so it's above 50%. That's good. You can see SPXS, Apple, these are all shorts. Amazon short. Cold, so you can see the nat gas were not good. This looks like it's the worst. I mean, IWM only did one small play, and this is not even leveraged, so barely any losses. Also on the crypto here was not great on Ethereum. And then SMST, I did get this back to over 50, so that's good. In the hands, I have 100 and did quite a lot of trades in there, so that's great. This Reddit only did one play, and then SMNC. I did a lot of trades with SMNC, so that's great. That's all positive. Yeah. Our beta. So our beta last quarter, Q3 was 0. This overall it's negative 1.17. You normally want this to be beta neutral, so you're uncorrelated. Now, however, I mean, if the market's going down and you're going up, you're gonna have a negative beta. And we've mostly seen a bear market. Since September to now, really, I mean, since the start of the year to now has been a bear market. You could say a negative period. Then we kind of had in the beginning of since September to like December is a bit up, and then now we have a good recovery. So I mean, SPY is close to neutral. Our beta's around negative 1.17. So I mean, you can see it's a bit more than one inverse, but our alpha, so our Jensen alpha is still very highly positive, 53% or 0.53. So this is very high. That's great to see. I mean, here you can see this is how it's calculated, right? So you have your return minus, right here you have your risk-free investment, so this would be a treasury bond around 4%. Then you have your beta, so this is right, so this is what I meant before, the -1, and then you have your market return, so SPY minus the treasury bond. So really, if this is 0, then you only have to compare yourself against the risk-free rate, which is around 4%, and then if you get above 4, then you have positive alpha, so that's good. Positive alpha, I mean, it's important because you're considering how much risk you have, so this would be, you have an edge, right? It's the way how to normally calculate an edge, so that's good. We have a very high alpha. I think we've always had a positive alpha. The second quarter was almost neutral. Maybe this fourth quarter that I'm going to do might also be close to neutral, just because I'm following SPY so much, or not so much, but more closely. So yeah, but overall we do have a very high alpha. Sharp ratios from inception. So this is around 7 months, 1.15. And then SPYs is 0.02, so it's barely positive, barely. So this is very good. I mean, anything above SPYs is great. So yeah, pretty good. If you estimate it yearly, we're at 1.38. And if you estimate SPYs yearly, it's actually negative, so close to 0. So that's pretty bad. However, you have to take into consideration all the tariff stuff. I mean, we've had one of the most volatile, you could say, times really. So we haven't really had this the last 2 years, you could say. So I mean, it's 0 right now. We are at, considering it's negative actually, and we have a positive estimated yearly alpha, Sharp. That's very good, 1.4, which is, I mean, above 1 is considered, good or very good. So we're doing excellent, right? Because and then this whole drama thing, and we're at 1.4, right? So this is negative 0.01. Imagine in a bull or a bear market, we'd be fine. Over here, Sortino. So this is kind of only measuring your downside, how much you're losing on the standard deviation. If you were, so this instead of making your high, you're like 20 to see you have a 20% day in your sharp, that would go against you, right? Because you would calculate that in your standard deviation. Sortino takes that off and only does your negatives, so it is higher, 1.7, so that's good. I mean, if you look at over here, our Sortino from SPY is the exact same, so it doesn't do any effect, and ours is still quite a bit higher. So Sortino's, I think, a better way to measure ours, because we do gain a lot. We gain 55%, so Sortino's probably a better way to look at it. So we're in the very good territory. We're getting there. I mean, it's really good. Expectancy, so just to see if your strategy is theoretically good in the long run, so your how many trades you're getting, your percentage of profitable trades, and then you also have your average gain minus average loss. So yeah, it's positive, so that's great. So our overall portfolio return after expenses, so my expenses, the only expenses I currently have are the exchange fees, so like whatever, how much per share you have to pay. So that's the only fees that I'm dealing with, very low amounts. And then this doesn't take into commission. If I would have taken a commission, my commission setup currently going into effect the next quarter is going to be a 5% initial. So if you're putting money in like this quarter, you would pay 5% on that. The next quarter, it would not apply. And then you would also have 50% on top of SPY. So the idea is that SPY is, let's say, 3% right now, or let's say SPYs were at 5, right? I'm at 55. So that means that 50% outperforming, I would take a 25% commission off that. And the investor, worst case scenario, would be up. So I would take 25%, right? I mean, so exactly. So the SPY is at 5. I'd be at 55. Let's say you take off a 5%, that's 50. And then I'm taking 25%, so they would be up, 25%, right? Because I'm taking 5. That's 50% for them, and then I take a 55% commission because I'm 50% outperforming, exactly. So they would be at 25%, exactly. So I mean, there you kind of get an example where if SPY is 5%, even after all the fees, you'd be up 25%. So it's still very beneficial for both parties. I mean, it's not, for example, like it's not 55%, but that 5% is also, so the first time, if you're only doing it that time, then you have a 30% return, which is even better. So I mean, I think it's quite fair. It motivates me to be outperforming SPY, right? Because then if I don't, then I don't get a commission. So that's kind of beneficial. The only commission I would get would be the 5%, which is also for only new people coming in or new money coming in, and you only have to pay that once. So yeah. So I mean, this has been great overall. This has been incredible. I mean, if you would have told me this in September, I'd be at 55%. Probably would have not believed you, but it has happened. So this is great. I mean, we have one more quarter, and then in the middle of the next quarter, or next quarter, it would be 1 year, so that could be good analysis time. I'm also going to do a LinkedIn posting for these past 3 quarters, an analysis on that. And if you want to join, just email me or whatever, any contact I have, LinkedIn, anything, and then you can get more info on that. So yeah, the commission setup is going to go into effect this next quarter. The last three quarters I haven't done a commission. Well, actually, no, the second quarter I did do a commission. That was kind of like in the end I decided to do it. Everyone approved, so that's fine. But right now it's going to be in effect forever. The idea is for until I cancel it, which is my plan is to just leave it there. And yeah, so this has been a great past. I don't even know how many weeks it's been, but almost 7 months of data every single day, nonstop. Really, I haven't missed a single day, which is really big. So yeah, I'm gonna probably go on go to vacations and stuff, so be a bit less active. I'm still gonna post the weekly videos. Everything's gonna be the same. It's just that my portfolio, I'm gonna try to make it less, so I don't have to be on it so much. And still see if I'm outperforming then, which I think I'll probably will be, because even in the first quarter I did that, I was still outperforming. So not much of a worry. We've had bull, bear, everything. We have kangaroo. We've had everything in between, and we're outperforming. So I mean, after this most volatile year, after like the past 2 years, and we're outperforming by 55. We're at 55% total. If that's happened, then I don't know what to tell you. In a bull market, it'd be insanely up, or even in the bear market. So yeah, I mean, I basically just proved what I wanted to prove. So this has been incredible. Thank you for watching, and hope to see you in the next quarter. So bye.